Hello, everybody. Back again. I disabled the music on my intro video temporarily because I'm debating whether I'm going to change it or not. So that's not an error. That was by design. I didn't want to have the audio play. I just wanted to get the video to play because the video is a separate file, but I'm debating switching the audio. So don't think it was a glitch or anything. That was by design. So let's jump into our weekly. I'm slightly excited because I'm recording now on my new PC that I just built. I still have to up the RAM that I got to then change the power supply, but it's working really well. I've already rigor tested it. I had to upgrade my freaking UPS because it killed my other one. That's how powerful this business is. It's probably 3 times stronger than my gaming PC, just to put it in perspective how strong this is, to the point I thought about making it my gaming PC. It's tough. Self-built by hand from a skeleton all the way through start to finish, because that's how Leicester does. If anybody took my recommendation, this is a call to action. If anybody took my recommendation about the investment recommendation only of the core tokens, of course, you see over here, Ethereum got dangerously close and then slightly exceeded and come down a little bit, but dangerously close to that 2,000 mark. I want to remind people once again, because I think it's important that you understand this guy bottomed out at 980 per coin. It was 980 per coin when it bottomed. And then I said it's likely not going to go too much lower than 1,000 because of all the different things of its use case and everything else. Well, I want to stress the pump you're seeing with Ethereum right now, the merge that's potentially coming is playing a factor. Buy the rumor, sell the news. So the rumor, right, is that this merge is being a thing and it's going to be a thing. And then when it comes out, there's going to be a sell-off either because it was a popcorn fart or because people are taking out profits. One of these two is going to happen. And I think it's good overall in the industry and the business. I think we are in a good spot situation with where we are going in recovery. And if anybody's listened to me for any long period of time, you would have heard me say it felt like Q3 was about the right time for a run. It felt like August, when I adjusted it, was going to be about that situation. We're here. Now, what we have to see is whether we can sustain it long term. Mind you, Ethereum is still down half of where it peaked. So it's not like we're up to the peak. It's not like we're back to normal, but this rise is good. We saw institutional money actually did flow back into Bitcoin. A number of these companies like BlackRock were buying more and stacking more Bitcoin. They might sell based on the need for profits. We're not out of the woods yet, but we're in a good spot, in my opinion anyway, that we're in a good spot to move forward now with more confidence in cryptocurrency. I also think some of this is being driven by sentiment, general sentiment. There's less confidence, certainly in the United States government, but other governments. We saw different, like with the tornado cash, which I'm going to briefly talk about here. We saw with what's going on with the so-called Biden inflation. We saw the prices of things are not where they need to be. Availability is still a problem. Supply chain is still a problem. Semiconductors still a problem. Mining crackdowns are still a thing. I believe, in my opinion, that sentiment is playing a big factor in some of this, that people are essentially going to cryptocurrency because they don't trust the normal state of a thing. I also believe with what happened with former President Donald Trump and the raid on his Mar-a-Lago resort down in Florida when he wasn't there, and based on spurious, frankly, statements, which is, okay, we think you took some docs and we want to confirm that, when other presidents took docs and there was no such raid, that's kind of an open question. All right, well, is it really this or is it something else going on? I think that's making people believe we're going to have a blowout in November. And if there's a blowout in November, that means there's going to be a bull run. And I think certain of these institutional sources, they know more than you and I know. And everything seems to tie in. The timing ties in. The flow, the information, the communication, everything that's happening seems to all tie in. And I do believe that the icing on top of this was what happened with Tornado Cash, which I, again, will talk about here in a second. I want to state this once and for all, under no circumstances am I telling you what to do, because I would not do. I make a recommendation based on what I see. And then if somebody took advantage of this, I want to hear from you, right? If you got life-changing money because you took the recommendation, and it's ultimately a gamble, right? You took the recommendation and you made life-changing money. We want to hear that. We want to hear some good news. We want to hear that people were made whole as opposed to having their project crap on them because of a sketchy dev. I'll briefly talk about some of the scams and some of the schemes that some of these devs are doing, and it's going to surprise you, some of the stuff I'm talking about. Fortunately, these are things you can independently verify yourself. I don't expect you to blindly trust me. I expect you to take the information and independently verify for yourself what I'm talking about to be the truth. So let's go ahead and get into this business. Right at the top of this, Robinhood. Of course, Robinhood is subject to a class action lawsuit, and I talked about this briefly on the podcast, cryptotalkradio.net. What's happened is in the past, and mostly the stock market, but it also affected Doge. In the stock market side, there's a known concept, it's actually baked into the technology, where they can apply halts when there's excessive volatility in mostly upward, but it's upward and down. In an attempt to try to keep people safe, they do these halts to basically temporarily halt trading. You can't do any trades for some period of time to let the volatility slow down. It's designed to enforce your right not to buy into a thing. It's designed to encourage you to rethink FOMO. It's designed to help protect people from pump and dump. There's all these different thought processes around why they do it. The downside is that when you had runs like AMC, GameStop, and some of these other tokens on the crypto side, Robinhood decided to apply it across the board. So they just said, you know what? In this, we're seeing so much volatility, we're just going to halt it for whatever, even above and beyond the normal halting on the stock market side. And that halting is not required because it's not part of any law. On the cryptocurrency side, they applied it anyway. We saw that with Dogecoin at one point. Now you get into this groove where people are not able to trade like they want to. They can't sell when things are crapping to a significant degree or already have done. So you think of it, if it drops like 30% and they halt it, that's a lot of unrealized loss. Some people might have wanted to sell once they hit that 30 and they cannot do because of this halt. That's what the class action is about, is them going rogue like a Robinhood and just applying the halt and harming investors. That's what that's about. I've said Robinhood is garbage because I believe it's garbage. It got over because of the simple interface and you can easily trade options and, AMC, GameStop, I got it. I think it's garbage. That's how I feel. So if you're in Robinhood, be aware this is a thing and you might get contacted. Like, I actually have a Robinhood account. I just don't use it. So I'll be contacted. Did I get hit with a halt that I can recall? No, but that's because I stayed away from most of the volatile tokens anyway. Or stocks anyway. I didn't ever use it except for some options trading early on. And if it had halts, they were the normal halts. So I was not affected, but I'm certainly going to respond if and when I get that notice about the class action, because there's money to be made off of Robinhood's garbage. I'm all for that business. So if it's not obvious, I don't think much of them as an exchange. I think they're the worst of the exchanges, frankly. And that's saying a lot, man, because you got crypto.com floating out there. And I don't think highly of crypto.com at all. I think Robinhood as a tool is better than crypto.com. I'm talking about how they manage investor money. I don't think highly of Robinhood at all. They allow you to do a bunch of stuff, but then they lock you down whenever they feel like it. And I don't think it's the way it should be. You're either going to be a free-for-all or you're not, in my opinion. Tornado Cash. Let's talk about this Tornado Cash. And then I've got another token that I'm going to quick cover. It's not going to be a full-on swag review, but a quick coverage because I want to talk about it as it ties to this business. If you didn't know and you weren't in the loop, Tornado Cash, of course, they've been blocked. I think I mentioned this on the past, but they've been blocked by the United States government. Mostly the wallets were blacklisted under OFAC guidance. And that means that they believe that there was foreign use of the money that was improper according to OFAC regulations. And you're asking yourself, how is it possible they can do that when cryptocurrency is not regulated? OFAC regulation has to do with money, foreign assets control, but it mostly has to do with money. The thought is that when you do the trading of cash, the primary reason you would do it is to get money out of the stuff, which is predominantly the case. You can trace the outs. We know the in is whatever cryptocurrency, and then the out is going to be something else. The out's going to almost always be a stable coin, right? Or they're going to a exchange, a centralized exchange. As I've said, the only or primary reason you do it a centralized exchange is because you are trying to wash funds out and get fiat. Once fiat gets in play, OFAC is going to get in the business because they're trying to keep you safe from your loss of money. Once the money is gone and it's a fiat cash out, it is a realized loss. That matters to them because it ties to taxes that they don't get paid. Well, the Netherlands, who's no stranger to this, apparently has tracked down the developer or believed to be developer of Tornado Cash. And it's a young guy. I think he's like 29 years old. And that surprised me. It doesn't, but it does. But apparently they tracked this guy down and then they have arrested him. Here's what's happening. And I want you to understand this. If the United States asks one of these countries to go and do a thing, they're going to go and do a thing as kind of a quid pro. We've seen that before. We saw it with Kim.com, who spoke out about some of these things, these raids, like the raid on former President Donald Trump. This over here, if the U.S. asks to do a thing, others are going to do a thing, regardless of whether there's any basis behind it. Now, in this case, there is certainly some basis in the loss of money, but it goes to one concern, which is around, is this person really culpable for what happened? Because he built a tool that enables what could be criminal activity. Think of it this way. If it goes to guns, right? And this was a Law and Order episode, believe it or not. If you manufacture a gun and somebody buys that gun legally on the fair market and they go and they shoot up a school, is the gun manufacturer on the hook, even though it's legal for gun manufacturers to manufacture guns? That's the question that's going to happen here. No, there's no law against making software. There's no law against making the tool. The problem is when people are harmed by way of that tool. Viruses are a great example. Viruses are still a thing. People don't think they are, but they are. Microsoft in particular has done a pretty good job with the acquisitions they did in software that are designed to help field off malware, field off viruses to where you don't feel it nearly as much as you would have in the past, unless you just go to sketchy sites all over the place. And then the browsers got involved. In the past, it would be that the virus creator, whoever coded that bad boy, would definitely go to jail because what you've done is damaged, in some cases, government equipment. Well, in this, the open question is going to be, can somebody be held culpable if they create a tool where somebody else used it for malintent? If somebody did something that's malicious or illegal even off of a tool that you created, are you culpable for that? That's unknown. Nobody really knows if that's truly a thing, and that's going to be tested in this whole case. The fact that it's taking place in the Netherlands makes it actually somewhat worse because sometimes the international will just say, whatever you want, Mr. US, whatever you want, without due process, because some of those countries don't apply the concept of due process. It's kind of assumed that you're guilty until you can exonerate yourself over there. And that's been seen multiple times. We saw it in New Zealand with Kim.com. We saw it with the girl who was accused of killing the guy that they were roommates with. And all. We see it all over the place. So it is what it is. But then you get other times like Roman Polanski, who was guilty, but then the accuser backed off and said, don't worry about it. It's not a big deal. But then the governments are still trying to chase this dude, yet they haven't managed to extradite him. That's kind of sketchy when you got, Julian Assange and he's about to be extradited. Every country is doing it different. And that's going to be open question here too, is why are you doing that here? You didn't do that here. Why are you not treating it equal? And it's going to be up to the U.S. courts if they extradite him, because it's really going to be a U.S., I think, driven initiative. If they enforce it overseas, I don't think that there's going to be any sort of enforcement. That's why I think they're going to try to extradite him for the U.S. to go after this dude and see what they can get out of it. Okay. Now, there's a common thing, right? When there are these enforcement actions or uncertainty actions and people don't like what's happening, there's an outcry against what's going on. The nice thing about a free enterprise, the nice thing about innovation, the nice thing about capitalism, I'll even say, is that it creates, when these bad things happen, creates opportunities. People step up and they say, okay, this is an opportunity. I'm going to jump on this and try to create something that was better. Build a better mousetrap since they failed over here, or we knew what the problem was and why they got caught or why it failed or whatever. It's an opportunity to step up. In comes Void.Cash. Void.Cash is on the Ethereum chain today, and it's a tool, and it has a token behind it. But Void.Cash caught my eye. I was like, okay, let me look at this. It's not getting excessive hype on social media, which really surprised me. It is getting some chatter, but it's not, they didn't go after excessive shillers. The story I'm just going to share behind this. Apparently, some devs got together and they saw what happened with Tornado Cash, and they said, you know what, we're going to do this because we think the service is good. We think people need the ability to be able to do transactions with privacy. So they built this tool, Void.Cash, that allows you to ostensibly, I haven't connected wallet because I'm not gonna, but to connect to this and then do this transaction. This Void.Cash then has messaging behind what they're doing and things that they're building and what it's all about, which is we're going to basically do an anonymous transaction because we see the problem is still a problem. We don't want transactions to be exposed on the blockchain and truly make payments decentralized so that you can remain anonymous as you do these transactions. Again, caught my eye and I was going to watch it because, again, I saw that there was some fundamentals underneath this one. I haven't done deep dive, but I did see things like, they locked the liquidity, the communication seemed decent, good. They don't force you to tell a scam, but you are encouraged to go to tell a scam to kind of understand what's going on. And they straight said, we had thought about doing this before, but we held off because we didn't have the money and we didn't know what was going on. But then when Tornado Cash got nailed, we said, okay, we're going to step up and do this. That messaging, that story inspired me. It was like, okay, so it was something you wanted to do. You backed off of it because basically you couldn't, but you saw an opportunity and figured you'd jump in. But under no circumstances did I see that it was like a cash grab. Like they never put it out to say, next 100X, let's have a go. None of that is on any of their messaging that I saw. It was simply, this is what we're building. Now we need to build the framework to make this work. And we believe that there's going to be an appetite because of what happened to Tornado Cash, if it's done correctly. The challenge, the downside, the risk, the strongest risk is, of course, because it's that anonymous protocol, it's going to be difficult to really audit it or review it. However, in the base fundamentals of things like the liquidity, I didn't have any concerns, at least on an initial surface. My call to action to you is take a look at this Void.Cash, take a look at their Medium, read through the Medium, go to the Telescam if you're in Telescam, check through all their material and see what you think about this one, because it at least caught my eye to keep an eye on it, if nothing else, because if they're serious and they actually have living examples of the things they're building, which is way better than some other projects, by the way. If it's true and they're legitimate and they're serious and they're going to make this a thing, it has strong potential here. Now, there's obviously, can they do it? And will they stand the test of time? Plus all the things that they're building out. Apparently, they have an open forum with their devs where you can go and ask questions. And I think that's Telescam. Take a look. I do recommend that you do and see if it makes any sense. That's Void.Cash if you want to check out the site. The website it's not going to impress you. The website has nothing on it. The website is just a marketing type thing. It doesn't have a white paper. It doesn't have any of the fundamentals. You have to pretty much go to the Telescam in order to understand what's going on with it. So that's FYI for this business. As far as performance then, if you looked at their 12-hour chart, this is Void.Cash. It launched 2 days ago and has had upward climb. However, if you notice holder count, again, they never went after shillers. They never went after an aggressive push to get the word out. They just kind of put it out. And then they're doing like Twitter, word of mouth type marketing. And they're not aggressively trying to go after shillers. They mentioned it to everybody and said, we're here and this is what we're doing. And you can ask us questions and this is what it is. And they're taking a very measured approach into this. But even with just a small amount of holders, there's this kind of a jump, and the liquidity was locked only for 1 month. Being locked for 1 month is a concern because the question is, well, why is it only 1 month? Could be because they're not sure it's going to succeed. So the question would be if they lock it for longer than a month, that would show intent that they want it to be a thing. Obviously, locked liquidity isn't the only measure for whether something's safe or not, but it is something to at least take a look at. Then I looked at the activity of buys and sells, and for the most part, it's a healthy blend of buys and sells and very little repetition. So I don't see that there was a lot of whales dumping off the project. And it seemed like a decent contract from what I could tell. I encourage you to look at it, see what you think, see if it makes any sense. I don't know that it does. It's too early. I'm going to watch it. I'm going to watch it and give them a chance to prove out what it is that they're saying, because I do think if it can do what they say it will do, it could be a strong contender, and that can only be good for the crypto business overall. Now, I want to do it because I I'm in the bank and I got to do it, but also the community should know and be aware. LIBERO/LIBERA, it's still a thing. And they're making the same decision, making the same mistakes. And what I'm going to do through our weekly, because I think it's important to keep hammering the message, and hopefully the community can share with them. It seems like that they're not actively banning, but they are having some issues. But there's more fallout from this folderol, frankly, with LIBERO and LIBERA. So a lot of people have lost a lot of money on LIBERO. LIBERO hit an all-time rock bottom. Despite the pumps, it still continues to struggle. And people don't really understand why. The reason LIBERO is still struggling is because of the inflation they incurred. It printed. So it devalued the product. If it had the constrained inventory it launched with, which I believe was 1.5 billion in supply, the run that we would have even now with stuff down would have significant amounts of money for people. But I think they underestimated demand. I think that when they launched it and they had the emissions set at a certain rate with an unrealistic APY, it caused too many people to jump in. And then when they launched the bank, they tied it to the printing mechanism, not anticipating a bear market. As a result, too many tokens were now circulating because of this issue, and nobody could sell because it's locked in the bank. So they assumed with the bank that it was going to just be a bull run, or that the bear was going to be temporary, and that was a fault of theirs that they should not have done. Now we're here. And they launched all this other shiny, and I've talked about the shinies ad nauseum. Well, people are frustrated because the Twitter account keeps pitching now the LIBERA miner and the BNB miner and all this, and people are pissed. And I'm going to go through those on a weekly basis, and hopefully, I know they don't care about me, and that's cool, but hopefully somebody can impress upon them why their project is in the crapper and getting it back to some stability. They're not going to listen to me, but maybe they'll listen to people in the community seeing it for themselves. So this is the kind of stuff they send out. You know, here's the bank. We want you to be in the Liberator Bank. Mind you, the Liberator Bank has no value in of itself. When they say these APRs and APYs, that only applies if you are a whale. Like you literally have to have thousands in the thing to see any appreciable benefit in Liberator Bank. The reason is because of the way they built it. The Liberator Bank, mind you, is the liquidity pool. So the liquidity pool, the pair, which is Libera and Binance USD, this Liberator Bank only stores that. Those tokens cannot be used in the miner. And it's still based on volume. Volume is still down, which means if you put it in Liberator Bank, and I'm not telling you not to, I'm saying if you put your Libera into Liberator Bank as a liquidity pair, unless you have thousands in there, you're not going to see a dent in any sort of benefits because of the way they've done this garbage. It's not going to benefit you. Now, what they're trying to do going forward is to say, lock major amounts in Libero Bank, lock major amounts in Libera Bank, lock major amounts in Liberator Bank to get these multiplicative rewards for the Libera miner and the BNB miner. So if you go into the BNB miner and the Libera miner, you'll see that it offers you multiplicative rewards based on X Libera, right, or X Libero. Those are coming from the banks. Well, now it's getting very dangerously close to a pyramid scheme, because that means that you're giving all this money. Now, at least with the banks, you could eventually withdraw for 100%, assuming they stay around. So it's not like you're locked in. When you go straight in the miner, that money, you don't get it back. So what they want you to do is just keep on paying in to the banks to get more of this, basically whale into the thing at multiple levels. Libero, Libera, and Liberator. Whale into all those to get these multiplicative rewards, and then you have to whale into the miner. Instead of what might have made better sense, which is the money that's already in Liberator Bank, you can use it to mine profits instead of having to add more money to the miner. They don't listen to me. That's cool. Crypto Talk Radio doesn't know what he's talking about. Cool. Then it was the lottery prize, which is part of the BUSD pool. Mind you, before Libero Bank, you just had to put it in Libero Bank and you automatically got a distribution once a month. That's still going, but it's a fraction of what it used to be unless you're a whale. Now they're encouraging, okay, put it in the Liberator Bank and it says win this lottery prize, which makes it random, not guaranteed, like the old was guaranteed. And that's because they're running out of money. And then the Lamborghini prize, they already had the Lamborghini scoped. Problem is that it's very difficult to win the Lamborghini because of what they ask you to do, which is not just have it staked in there, but then you got to go fill out this gleam.io form, and you got to do the Twitter thing, and you got to do the telescam thing. You got to do all these steps and tasks, all designed to essentially self-shield the project. That's what that does. You're not winning it, you're applying for it. And then it's random whether you're going to get it or not. If you're on it, I'm support you. If you've won one, great. I know in the past there was a win and they separated, they split the money across everybody who won. Great. But think of what it took to get there. And so if you're all whaled in, cool. If you support the whale methodology, cool. I don't and won't. So then it says commission in Binance USD, 10% commission in Libero. This was what I broke out in the minor breakout. You have to essentially whale in to get anywhere close to that. I think on the Libero side, it was like 30 billion or some crazy number that nobody's going to do unless you're a whale. And most of the low-level investors, because of the low value of it, might put a couple $100 up to 1,000 into the thing because they don't see it, because it just sees the price drop all over the place, right? Well, now Cloud9 says, quote, don't bother with this shitty project, lies and misdirection every day. You don't want to hear this, people. I don't know what it's going to take for that to resonate, but this is not what you want to hear. Lies and misdirection every day. Lies in the sense of what was promised before versus what's happening. It's a lie. Misdirection in terms of here's what we are doing and why, and then it ends up being something else. User Big Al says, quote, I got ruined by Libero. I'm not adding nothing to your pool for all you devs to eat. I'll say, and you can listen, if anybody wants to share it to them, I don't care at this point because they don't want to talk to me, and that's fine. It's their project. They said Crypto Talk Radio doesn't know what he's talking about anyway. Let me make a statement to everybody. I said that Libero, they don't care about it. I challenge anybody to come back and show me evidence that they care about Libero, because that's all I said is they don't care about it anymore. I challenge anybody to contradict what I said with some data that shows they care about Libero, and no, not the burn on Libera, because Libera doesn't have the volume to make it worth a damn. And it doesn't matter because everybody was told to lock their Libero into Libero Bank. And then we had to watch our value dwindle, and it's not worth selling because you lose 90% of it. So I question, how is it that Crypto Talk Radio doesn't know what he's talking about? That no, this is what it is. This is what you're not getting. And yes, your project is making people lose money. Now, as far as the devs to eat, nobody can prove that. Nobody can know. It is what it is. But the big concern is that no, Libero is not where it needs to be for everybody who bought in and under the premise that we were told. This is what we were told. You're going to make money, and you do, but the amount is way lower than what it used to be and what it should be, and that's what he's talking about. As I've said even, I refuse to add more money because what I have doesn't have the value that it's supposed to have, and I can't trust that they're not going to do something else or spin up another shiny that's going to further harm the value. That's just throwing money away, and I see them continue to go after shinies. No, I'm not doing that either. I don't disagree with Big Al. User Hussein White says, quote, this is scam. Again, it could be perceived as a scam because essentially people are losing money due to the actions of the devs, but the inactions as well. So I don't think they're intentionally trying to do it. I think they're incompetent, frankly. I think they're just reacting to a shiny. I think that they're jumping to different things because they're thinking they have to react to what's happening instead of solid fundamentals that would make things successful. That's what I believe anyway. So is it a scam? At this point, it's pretty dang close to being considered a scam. I just don't think it's intentional. I don't think they're doing it by intent. I think they're doing it because they're incompetent and they don't know why this is a problem. User Shitter Thumb says, quote, teams are rats, Mike. The kill Libero, not the bear market. Only drawing that limbo if exists is Leo, and I'm not going to quote the rest because it's gets borderline racist, but here's the problem. I don't know. I've never talked to Leo because Leo refuses to talk because apparently Leo cannot pronounce English very well. If he is from that country, maybe that's what it is because this happened with Santa Coin with a different country. There was a perception because of the country of origin that it might be perceived as a scam. Here's my counter argument. If anybody, any of the mods or any of the admins or any Leo himself happen to hear this, if the whole reason that you refuse to talk to people, if the whole reason you refuse to verbally speak is because you're concerned about the perception because of your inflection and potential challenges speaking English, even though you can write it, but you're concerned about that, let me hit you with a counter shot, with a bank shot. The refusal to speak at all is probably worse, especially when the projects that you oversee are in the crapper. And you have people like this who are concerned about you and your intent of potentially ripping them off. And your silence isn't helping the process. And no, it's not routing it through Crypto Addict or somebody else as your spokesperson. At some point, you need to show that you are serious and you're not trying to rip people off. And guess what? That means you got to make hard decisions about, look, I need to go and put a face to this and put a voice to this. And guess what? There are platforms like Crypto Talk Radio, but there's others. There's platforms that are willing to have the conversation and show good faith to help the investor sentiment. And just maybe it might get us back to some level of solvency, or you can keep ducking the smoke. And you have people like this that are calling you a scam artist because you're hiding. That's up to you, though. User Don John Prod says, quote, so Libero's dead now. On the last weekly, I called out Don John Prod, and he keeps asking the same question. And Don John Prod's not going to get a definitive response because, unfortunately, they will never admit that they don't care about Libero. That's not how they work. And I want to be clear. They don't declare that they're done with the project. They just move on to a new shiny. That is the pattern of the team. That's what I want to be clear. They don't just say, you know what, we're not doing that. We're going to do this. The pattern is that they spin up a new shiny. And I broke down in one of my past videos about the history of this, starting from Garuda and Cerberus. It gets hacked. They spin up Thorium. Thorium then spins up the Thunder tokens. The Thunder tokens basically get abandoned. They never declare that they're done with the Thunder tokens. Those are still out there, still tradable. They never stop trading. The rewards still issue on them. They just spun up another shiny, which again was Multiverse Capital comes around, another shiny. Epic Hero spins up another shiny. And then Libero spins up another shiny. They just spin up new shinies. And now Libera, another shiny. F Libero, another shiny. Thorium V3, another shiny. You got to understand, they'll never tell you outright, we're done with this, we're moving on. That's not the way they work. The way they work is they spin up another shiny. Your call to action is to understand that's their pattern of behavior and make a decision of what that means to you. But if you've listened to me at all, and I don't think Don John Prod does, if you listen to me, ultimately what I said is they don't care about Libero. I say that in confidence because of their actions and inactions. It's obvious because the only reason you would go after shinies is because you're going after money. The only reason you would try to encourage people to lock into the bank is because you're running out of that money. Well, why are you doing it on multiple different tiers? You should be able to do it on one tier. Libero Bank should be enough if you have sustained volume. It should work for everything that you're trying to do with everything else. The problem is that it harmed investor sentiment because of the excessive printing. Well, that was a bad decision in design. Okay, stop making those bad decisions and you don't have that problem. But again, they don't listen and are not listening to these common sense things that people have been trying to tell them in the community, and then trying to get, the community reached out and tried to get them to talk to Crypto Talk Radio, and the devs refused. They'll say they didn't refuse. You refused. You refused because you refused to take advice from me. That's a refusal. It's your project. You're free to refuse to talk to anybody on your own project. But then you can't complain when what you're doing, spinning up shinies, ain't working. Because I just straight told you before this falderall, it wasn't going to work. Which spins me over to F Libero. And Dion comes back and confirms, yeah, F Libero is profitable, like you said. Yes, it is for now. Until they do F Libero, and it's going to jack it up just like with everything else. And there's probably going to be another shiny. Instead of just leave it alone because it is profitable, but they're going to get ahead of it for the same reason, the excessive printing. Because F Libero does have the printing. F Libero only has, I want to say, probably 10% of the total holder count of the main Libero. That's why it hasn't gotten out of hand yet, because there's not enough holders. There's only like 9,600 holders on F Libero because people were not confident in Libero because it was tanking when they launched F Libero, when I told them, launched LIBERO on the Phantom chain and allow a bridge between for people, and they didn't do it. They spun up a different token, and people weren't buying. So you have 100 some odd thousand holders on LIBERO stuck in the bank, and you couldn't convince them to buy into LIBERO because everybody saw their LIBERO was going down in price. Like, it all ties together, and it's sad because LIBERO actually is a very good token from profitability because it doesn't have the gas. So like on the LIBERO side, the claiming and everything else, you wouldn't have the same amount of fees, the amount of gas or anything else, but at the same time, it's profitable now. So I'd rather it be left alone, and they should be focusing attention on marketing LIBERO and using it as a strength to then rebuild on the main LIBERO. They're not doing that either. They're just jumping to a new shiny in Thorium V3, and I think that's going to be a catastrophe of epic proportions. User Roll Star says, just simply, quote, scam. Again, a case could be made. I don't think it's intentional. I don't think it's malicious. I don't think it's by design. They're reacting because they don't know any better. User Gino595 says, quote, well, what happened to the weekly burn that you were doing? Here's the thing. The burn that was in place, this is the educational point. The burn that was in place for LIBERO. So when they launched LIBERO, the LIBERO token, they launched it with a manual burn. When they got into LIBERO Bank, they turned on an auto burn. When they did the LIBERA, they tried to turn it to a hyper burn. Here's the problem. The burn was not sufficient to offset the printing. And the printing they call emissions because it's a rebase token. So what was happening is there were so many people that got into LIBERO, and some of them whales, and then locked in the bank. When you locked in the bank, it had a sky high APY, right? And then people in the wallets, you got a sky high APY, and some people could double dip. So think of it this way. If you had put, let's say $10,000 when it was peaked, right? $10,000 of this business into the bank, you were going to make, it straight tells you, you're going to make this much money back in the core tokens after, I think it was 3 months or something. And then you kept it in your wallet, you're still getting those rebase rewards, and it's only a positive rebase. So somebody could put $10,000 worth in the bank, $10,000 worth in their wallet, and they're double dipping, right? Well, if you keep doing that, so I'll spin up another wallet and I'll do another one and spin up another wallet, do another one, spin up another wallet, do another one, you're making bank, right? The project, the actual protocol had to print additional LIBERO to pay rewards. See, the flaw of LIBERO in how it was designed is it should only have ever paid rewards in Binance USD. Why? Because by paying rewards in the core token itself, the same token that you buy, you had to do inflation. You had to do printing in order to pay that at a high APY that you promised. Whereas if they had done it with Binance USD, number one, it would have negated the sales that harmed, in the graph. Number two, it would have negated the need to excessively print tokens. The reason that they didn't do it, I believe, is because if they had just done a Binance USD based reward system, it would have meant that you had to constantly have buy pressure. And they weren't confident that they could do it. So they tried to use this incentive by the core token, but that was silly because it assumed a bull market. In a bull market, you're getting more, but it has high enough value that there would have been some sell back into the pool, and then you redistribute the same, right? And so it's this in and out. They didn't know how to deal with they didn't expect a bear. And when the bear hit, they didn't know what to do about it. And so they overreacted, which is what has cut the emissions down. It didn't solve the problem because then they found that the zap was further creating sell pressure. So the way LIBERO Bank initially was built was flawed on its face because what they should have done is simply say, lock it in the bank and we'll give you Binance USD rewards. And that is the only reward token we're going to give you. And if you sell your tokens, we're going to apply the tax as normal and use that to replenish the Binance USD reward pool. None of that was built in because they didn't think they needed it. They instead spun up LIBERA. LIBERA should have worked if it got on LBank. To my knowledge, it's still not on LBank. Well, then that's not getting the US dollar pressure, American money. Without that, you're not going to get it back to any solvency. If it gets on LBank, you'll get at least some buy pressure. Do I think it solves the problem? No, because you still have this harm sentiment on LIBERO. So what they did is the burn is still there. You can see it on the dashboard. It's still there. It's not enough to offset the printing that's still happening. It's still printing. It's just not as much, but it's still printing. There's so much supply out there now. It's a crazy amount of supply compared to what it started with, which was a fraction of what it is now. So there is still a burn, but it's not going to move the needle. So don't count on it. Also understand, the burn was never going to improve price. The burn was going to constrain supply. You can't constrain supply in a rebase token. And you can't constrain supply if you're issuing rewards in said rebase token itself, as opposed to the gas or the stable coin, which is not how they built it. So it was never going to move the needle, is my point. User, I think it's IQBall24 says, quote, LIBERO, dump again so deep. So he's talking about it's dumping again, dumping again, dumping again. It keeps dumping, excessive sell pressure. Not only is it sell pressure, it's the value of the token. It's the printing that's still happening. There's a number of different things. LIBERO cannot recover. That's why I've said, like with Dion, if he's listening to this, that's why I said, your LIBERA, the short pump that you saw, it's not up. It's down. It's down because LIBERO's down. LIBERA's wrapped LIBERO. That means you're not up, and it's not going to be up until they fix LIBERO. LIBERO's price, currently and expected, holds back LIBERA's potential because LIBERA is just wrapped LIBERO. The price correlation. You've got to fix LIBERO. That's what they don't understand. That's what they're not hearing, is this ain't going to go nowhere until you fix this dang thing. And they refuse to, and I don't know why, and it is what it is. But again, to understand what should have been done. When they launched LIBERO, they launched it perfectly fine. Rebase token, you get this. There was no staking. LIBERO Bank comes in. The mistake they made, they should not have issued core, LIBERO as a reward. It should have simply been Binance USD only. Then you encourage buy pressure, and people are going to sell and buy in. They'll take the Binance USD and they'll buy more in there. Build a mechanism that lets you do that without a tax. Do the sell tax, and they would have been fine. And use the sell tax revenue to replenish the Binance USD reward pool so that the price remains stable. And then pair everything to stable coins. They didn't do that. So it is what it is. So it's dumping again because, again, number one, there's no pressure to buy it. That's the big thing. And they got rid of the bonds, so there's no encouragement to buy them at a discount, even steep discounts, which would have helped for whales. Number two, it's printing still, so the value's toast and crap. And then three is the zap, which I don't think they fixed. And then, of course, I heard they're still threatening, well, we got to go V2, doop. And then we're pushing back on V2 because we know that's disruptive. At this point, maybe V2 helps. Maybe they don't care. I don't know. User Ollie says, quote, just letting everyone know who bought in this got rugged. This is in response to this message that was talking about CoinMarketCap saying top 10 by followers on CoinMarketCap, and LIBERO hit number 2. The only reason that LIBERO has an increased number of followers is because people are curious about this. What's it doing? Where's it going? What's going on with this thing? That doesn't translate to buy pressure. It doesn't matter. Having a number of followers doesn't matter. We learned this from Shib. It doesn't mean anything. The only thing that means anything is that somebody's buying into your project. So I don't take this on its face. Now, the reason that I saw that this is garbage, this business over here, Everscale is number 9 on this list. Number 9, and yet LIBERO's number 2. Let me tell you something. Everscale, I hadn't heard of it before. I just heard about it through this. Everscale is its own blockchain. Everscale is on a growth pattern. Everscale's price is significantly higher, so I suspect it's one of those like Everrise, where nobody really knows about this business and nobody's ever looking at it because I didn't see excessive amounts of shill. It's got a pretty good follower count, but I suspect it's because it didn't have an excessive amount of shill as to why Everscale is way the heck down here, but LIBERO, which is failing, arguably, is way the heck up here. Either that or people are just curious about, or it's like the train crash, right? You can't take your eyes away from it. All I'm saying is CoinMarketCap wouldn't lie. So clearly there's a lot of people looking at LIBERO, but are they looking at it in intents to buy? Or are they looking at it simply to watch the train wreck? I don't know that. All I'm telling you is Everscale should not be number 9 with LIBERO number 2. Freaking Engine should not be number 10 with LIBERO number 2. Like this list makes the only explanation for this list is people are only going after the shill tokens. They're only going after the ones that they think will make them a millionaire, and they don't care about the fundamental ones, because I can guarantee you Everscale has 10 times the fundamentals, if not more, of any other token on here for sure. and engine's already up there and it's well established. So I was concerned seeing this list, frankly. And then this person, Ollie, talked about, okay, if you bought into LIBERO, you got rugged. You didn't get rugged, but you are harmed. You're not where you should be because of the actions and inactions of the investors. And here's that Everscale. And as I was looking into it, I'm like, okay, they've been around for 2 years now. And we're telling me that somebody cares more about LIBERO, which is just under a year old, than this one. Okay, whatever. So user Cloud9 says, quote, don't bother. This is LIBERO. Don't bother with this shitty project, lies and misdirection. I talked about this one before. I am really disheartened to see what happened with LIBERO as somebody that's in the bank, but also for the investors, because the community is a good community in general. And I'm disheartened to see that. And if anybody in the community listens to this and you're feeling the same way, I'm sorry that this has happened. I'm sorry it's going that way, because again, LIBERO was one of those that should have been a standout if it was done right and they would understand to stop reacting to a thing. That's the biggest takeaway of this business. And it's unfortunate because you don't want to see people, not only people confused, people upset, people frustrated, sometimes people saying things that are not true because they have no other way, because they don't know what the truth is, because they're not being told, because the dev refuses to go on the air. And frankly, the reason is kind of crap. This is disheartening. It really is on a otherwise very strong project. So I thought it's one of the best communities, frankly. There are the LFGs and the G levels and whatever, but the vast majority are really good people that saw that this had a serious potential, and then it gets ruined by dev incompetence. That's frustrating. It really is. So I'll close with this, because it looks like I don't have any questions. I'll close with this. I'm going to stick with my initial recommendation. I had said, and I have been saying for weeks, I believe the core tokens, the gas tokens, is where the wealth's going to come back. I believed August was our time to hit a run. I think we hit the initial phases of this run. Even if you don't care, right, about the core tokens, you don't care about the Bitcoin, you don't care about the Ethereum, BNB, that's cool. Like, I support that, right? If you don't care about them, great. But think it through. Whatever other project you want to buy into, they're going to need one of these. They're going to need whatever token as the purchase mechanism if you're not using stablecoins. And even then, you're still going to need gas to do the transaction in most cases, unless it's, and even let's say like Phantom will be like free or a penny. You still got to have it on hand to be able to do the transaction. You cannot go wrong with the core tokens, in my opinion. So I'm going to stick to that. I'm going to stick to the core tokens can never steer you wrong as a fundamental to a diverse portfolio. I also think projects like Everrise are here to stay, and they're going to be foundational as well at some point in the future. I think that people that like this Void.Cash has some potential, and we got to watch it for time and see if it's able to do what it seems impossible or even risky, because it's a high risk because of what happened to the Tornado Cash dude. But at the end of the day, I'm still going to stick with these guys. I'm not confident that the altcoins are doing, like, now we see that some of them are struggling, even though the token they're paired with is jumping. Well, how can we explain that? That means those tokens were never doing anything to begin with. They weren't the reason it was pumping. It's because of these. And once these go back up, the value of those will go up. But at that point, you're paying a dev when you go straight to the frickin' bank yourself. That's what I think, in my opinion. So what's to see? And we also have to see Bitcoin, because it's going to hit that 25,000. That's going to be a real test. We have to see if it can hold its resistance line on the way up. I think Bitcoin's going to take probably about another year or so before we get to 30,000 level. I think it's going to be a while, but I believe anybody who is confident in Bitcoin long-term, who's buying in now, is going to make out very well in the next 2 or 3 years. This is my opinion. I think anybody who's buying into Ethereum now at the prices we're at, which are even higher than the base, but way lower than the peak, I think we're going to make out very well in the next year, which is going to be based on the whole Ethereum 2.0 and the merge. But I think anybody in Ethereum is going to be making out very, very well financially. I think the other ones like BNB, specifically Avalanche, Compound, I think anybody who invests in those is going to be well off in probably the next 2 or 3 years. This is my theory based on the trends I'm seeing and the sentiment shift I'm seeing back towards cryptocurrency and some of the institutionals coming back into it. and I'm less enamored over garbage tokens because it's clear to me they don't do anything. They're just paired to another token, and they're benefiting from the fact that they're paired to another token. It's not that they're really doing much of anything. And no, I'm not sold on we got an NFTs that look like dogs. Doop. I don't care. I want to see outside the crypto bubble space because I want that other 94% of the world who's not in cryptocurrency. I want their money. I don't care about the rest of it. I want their money. So for me, I'm looking still for those projects that do that. The gas tokens automatically do that because they have no choice. They have to. They're required for cryptocurrency to do a thing. That means to me they're sure bets in stability of the portfolio. You are, of course, free to completely disagree with me, and I support your desire and ability to disagree with me. But I'm hopeful, perhaps naively, that seeing Ethereum base at 980 per coin and looking at its current price that I'm so nicely showing you off to the side helps encourage why I say the core tokens can never steer you wrong. As part of a diverse portfolio, they can never steer you wrong. Your value is going to be stable, and the garbage tokens, they're not doing anything. They're riding on the backs of this stuff. So that's what I think on that one. Before I have one closing note, but before I do that, I'm going to pause ever briefly and just see if anybody has any questions on what I just covered. I don't have any in Twitch because I have Twitch up now that my computer's strong enough to do that. I don't have any in Twitch. So if I have any questions in YouTube, please ask now before I put my little closing note out there. Forever hold your peace with my truth tea. Good enough. So, truth tea time. Last episode, I talked about I was going to dig into this whole business of dead wallets and some theories that were floating around. My research is not done, but I got some initial findings. And it's going to probably shock some people. It probably won't shock other people, but I think you should know because it ties to, if you're really interested in this, when you do investigate those garbage tokens and some of the things that they're doing and you choose to invest in those, understand one thing. Most of these tokens do the same mechanic, which is that they will say that they burned half the supply or they burned 90% of the supply or they burned whatever up front when they launched the token. So you have total supply and you have circulating supply. When you do a burn, and we're talking a transfer burn, so you transfer it to the dead wallet, you transfer it to the zero wallet, that's not destroying the tokens. Those tokens are still part of the total supply. The circulating supply goes down because they're no longer in circulation. They cannot be accessed, presumably, by any human. So the circulating supply will be much lower than the total supply, but the total supply is still there. Now, what you don't know, this is the truth tea, what you don't know is that there's a gimmick behind this whole transfer burn that devs know this, the token devs know this. Here, I'll give you an example. Let's say I create a token, and for simplicity of numbers only, let's say it's got 1 million in supply. Let's say that I give my buddy 10% of this, right? So I give him 10%. So we've got 10% of the total supply, my buddy does, sitting in the wallet. If I then do a 90% burn, so I burned all the rest of that stuff, that means that that buddy is holding the vast majority of the tokens still remaining in circulation, right? When you go to these tools that tell you how many tokens a different wallet owns, they're keying off the total supply, not the circulating supply. I ask you to think about what sounds better to you, that I hold 10% of supply or that I effectively hold 90% of supply. That's the gimmick of the transfer model because it's all based on total supply, not circulating supply. The devs know that. The crypto devs know that. It's a gimmick to hide whales, which is why if you've heard any of my coverages for individual tokens, you'll hear me call out risks such as, did you do a private sale? Did you do airdrops? How is it that people got tokens before you opened it up on the public market? And if anybody got those tokens, who are they? Whether they're the owner or not, how did they get the tokens? How much did they get? But more importantly, what did you do after the fact? Did you burn this many but people are still representing a significant amount of the tokens. Then the risk is that they dump those tokens and the price craps. Well, if you look at any token chart, literally any token chart that is not a core token, they all follow the pump and dump pattern. They all have that initial climb of a thing, and then there's an initial crap out, and it hardly ever recovers, if at all. And to a T, I challenge you to go look at pretty much all of them. You can look at Shib does it, Satama does it, Floki did it on the old version, Kishu did it, I'm pretty sure, Yushi did it, pretty sure, Cult DAO did it. You can go down the list. They all do the same thing, which is that initial pump and dump pattern. If you were to scan them, you're going to find that very few people, in some cases, hold a significant amount of tokens. The challenge to you, the call to action to you, is to look at how many tokens that the largest wallet holds. What's the percentage it shows? If the percentage doesn't make sense based on the circulating supply, that's what I'm talking about. If it's like, okay, this wallet holds 5 million of a proposed 10 million, let's say, that's in circulation, but it doesn't say 50%, something's kind of not quite right there. Then you want to look at the total supply, which you can find on the scan, BSC scan, Ether scan, whatever. Look at the total supply. If the total supply is like, billions and billions and trillions and quadrillions of supply, well, now that percentage, you can correlate it to the total. That will let you prove what I'm saying to be the truth, which is it's a game. It's a game to hide whales, which is why I don't like tokens that do private sales. I don't like tokens that do excessive airdrops. I don't like tokens that try to send to their buddies. It's clear from bubble maps and things where they did distributions before they gave it to the open public, because those are likely to then be pump and dumps for that very reason, especially if they do that burn. The ones that fair launch, the ones that don't do pre-distribution, the ones that don't even do pre-burn, and they right size their supply according to what they want it to be, which is the market cap driven type supply, those are going to have more stability, or at least expected to be. Doesn't mean they're safe. It means that they have a stronger probability of being something worth an investment, in my opinion. And it's only my opinion, and you are free to tinfoil me. I gave the call to action. Take a look at it yourself and see what you see. I will at some point on one of these token evaluations, maybe this week, I don't know, if I have time, I will go through that exercise through the video to show what I'm talking about on a token that I may think is garbage, possibly. Maybe I'll do it on Cult DAO. Maybe, I don't know. Anyhow, that's all I got here for today for this week's episode. I want to thank you, whether you listened in live or you listened after the fact. We will be back next weekend with roughly the same bat time, certainly same bat channel with more additional coverage of what we're doing. I had to finish all my tweaks on my tower to get the power supply in there and the updated RAM. But I've been very pleased with the performance so far, and the quality of everything is going up because I can't just raise the bar. I got to be the bar. I'll check you guys out next weekend